Good morning, everyone. Welcome to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Frontier Africa Report. Today is Thursday, the 10th of June, and on our agenda, we'll be having a rundown of the profile in international equity markets, as well as the currency and fixed income markets. After which, we'll have some headlines from our partners at Frontier Africa Report. Before we hear from our speakers, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties and is being broadcast live on Facebook. The presentation is scheduled to hold for 30 minutes, which includes Q&A. However, if due to time constraints we are unable to answer all of your questions, kindly forward them to us at research@vetiva.com. Today we'll start with Sean from our Global Equities Desk. Good morning, Sean.
Good morning, Joshua, and good morning to our listeners. We'll start off reviewing some of the markets in West Africa. Specifically, we'll be looking at the Ghana Stock Exchange, the BRVM, as well as the Nigerian Stock Exchange, as well as our outlook for the day. Starting off in Ghana, the index ended the session marginally positive with a 1 basis point appreciation. We saw improvement in the activity level as both volume and value increased by about 51%. Largely, it was a slightly busy session with the likes of fan milk and recently that we have noticed benzo oil. So they were the two gainers in the session. Though there was no loser, as there was no loser on the day. MTN Ghana also continued its dominance in the market, as we saw over 7.6 million shares traded on that counter to lift the activity level. So for the yesterday's gain, which is just a 1 basis point, this also pushed the index to a 2.88% gain for the last 4 weeks, and as well as a 39.64 year-to-date return on that index. So believe going into today, market should continue to trade same pattern, uh, basically mixed pattern, and we see fewer trades going through in the session today in Ghana. Then moving to BRVM, we saw the benchmark index ending the busy session as well. It was another busy one, which is on the high with a 97 basis point gain. So we saw 97 bips gain in BRVM. Uniwax, Nestle, Cote d'Ivoire, as well as CFA Motors were the major gainers in that session. With all those names appreciating over 7% on the day. We saw significant improvement in the turnover level with about 131% appreciation, which was on the back of the big trades we saw in Nestle as well as Bolo Transport. Bolo Transport, which is one of the biggest transportation company in that region. The counter has recorded, that's the Bolo Transport has recorded over 19% gain in the last 1 week. I think if you recall through the week we continue to mention Bolo Transport as well as CFA as the names that have been quite dominant in the BRVM market. So in the last 1 week, it's been 19%, and we've seen a 6-month gain of about 40% in that particular counter. Still in BRVM, market breadth also ended largely positive. We saw 24 gainers and just 6 losers. Just to confirm that investor sentiment still on the market is still positive. So going into today and our expectation, we expect positive sentiment to filter into the trading day as investors. We believe will continue to cherry pick names like Nestle and CFA Motors. We've seen those two names as some of the dominant names that have that continue to shape the direction of the market in BRVM. So we just continue to note those names. So, and like we always mention, if you're looking at some exposure into those markets, please kindly get in touch with us. You can send us an email at dealing@vetiva.com or to our sales team at sales@vetiva.com. I'll be happy to help. So finally, we'll come to Nigeria, and the all share index sustained the positive run with another upward close of 74 basis points to lift the index point to 39,170.95 level. The largely mixed and busy session saw investors buying up. We saw them buying up names like Dangote Cement, which ended the session about two, which ended the session 222 bips higher to close at 230 to close at 230 naira. We've seen it, like I mentioned yesterday, we've seen it move from the in the last week. We've seen it gain over about 4.9%. Also, Komu was also lifted by about 975 bips to close at 116.5 percent. That's for Komu oil. GTB, WAPCO were also other gainers in the session as we saw improved interest in the market. We saw it from largely the foreign players who were dominant on Dansem and Okomo. So for the Dansem and Okomo trade and for the movement we've seen in those names, we saw largely foreign buyers in those two. And like I mentioned earlier, activity level was mixed with volume traded. Though volume traded dipped by 17%, we saw the turnover improve by 149% to 3.9 billion, which we haven't seen in a bit. We've seen market trade range bound between 1.3 and 2 billion, but we saw 3.9 billion yesterday, which was largely on the back of a 950,000 cross trading in Nestle. So that was what really pushed the market. That was about one that was about close to 1.4 billion. So that really pushed the turnover in that market. Then for the sectoral performance, we saw sector ended the session in the green. We saw this was led by industrial with the decent gains that was recorded in both Dangote Cement as well as WAPCO. Market breadth also was significantly positive. We saw 22 gainers and just 5 laggards at the session for a 3.67 times close, which is I think that's been the highest we've seen recently in the market. So for us, though we saw some foreign interest in specific names like Dansem and Okomo in yesterday's session, like I mentioned, we still believe majority of these foreign players are still on the side while they will cherry pick on a few names, you know. But once we see demand cut across sectors, especially like the banks and especially in the banks, I believe we can begin to conclude that they are coming back and they are re-entering the market. But for now, we think it's just those specific names that we are looking at. So finally, going into today and our expectation that we expect the market to continue on the positive trend. Though we do not expect turnover to stay at yesterday's level of 3.9. Also, we expect demand in names like Dangote, Nigerian breweries, and Nestle to be sustained, while the banks are also expected to improve marginally. However, we do highlight that we can also the possibility of profit taking, just to moderate prospective gains that we can see in the market. So that'll be it for the equities market. Thank you.
Thank you very much, Sean. Next, we'll hear from the fixed income trader, Omar again, on the fixed income and currency market. Good morning, Omar again.
Good morning. Good morning, everybody. I'll be taking a recap of the Nigerian fixed income activities for yesterday. I'll start with the money market. The money market maintained its run on the positive region as opening figures for yesterday was 133.99 billion positive, This was a marginal improvement from Tuesday's opening figures of about 100.44 billion positive. Despite this improvement in system liquidity, money rates tightened by over 30 basis points to trade around 14.6% levels from the 14.3% levels recorded on Tuesday. This slight uptick in rates was spurred by the increased funding in the market as players made provision for a possible more auction debut today. We expect the money market to trade at higher levels today as players fund for the settlement of the additional 88 billion NTB auction sale. Moving on to the FS market, the parallel market maintained yesterday to trade at 502.00 naira to a dollar, while the earning window traded at a high of 420.77 naira to a dollar, closing at 410.95 naira to a dollar. That was a 55 kobo appreciation from where it closed on Tuesday. And this was largely spurred by the significant improvement in R&E industry turnover as it improved by 261.5% to close at $226.98 million from the $62.79 million recorded on Tuesday. We believe the Naira will continue to hover around these levels in the absence of any significant inflow of FX into the system. Moving on to the T-bills market. The T-bills market traded on a tepid note yesterday as attention shifted to the NTB primary auction. We saw offers on the short to mid end of the benchmark curve, especially on September 2021 and October 2021. Most of the trade that we had dealt yesterday were on the newly issued special NTB, that's the August 30th, 2021. Overall, rates closed flat across the benchmark curve. The almost secondary market traded on a relatively active note with some bullish sentiment seen across the curve as rate declined along the mid to long end of the benchmark curve. We also observe interest on the January 18, 2022 paper, with trades executed along the mid to end of the curve, particularly on the December 14, 2021 and February 15, 2022 papers. Sorry, overall average benchmark rate declined by about 11 basis points to close at 9.2%. At the NTB auction, the DMO sold a total of 479.26 billion as against the total amount of 91.27 billion that was offered, while overselling the long end by 208%. Despite the general anticipation of an uptick in rates on the marginal rate on the 1 year paper because of the improved amount on offer, we saw the DMO cut the marginal rate by 1 basis point on the back of improved demand from investors at the auction. For the 91 days, the total amount on offer on that end was 4.7 billion, while the total subscription was 6.8 billion, and the total allotment was 5.06 billion. The marginal rate on that end maintained to close at 2.5%. On the 182 days, the total amount on offer was 7.8 billion. Subscription was 11.7 billion. Total amount allotted was 10.09 billion. Also, the marginal rate maintained to close at 3.5%. For the 364 days, the total offer on that end was 78.71 billion. Total subscription was 308.49 billion, while the amount allotted was 164.11 billion. The marginal rate on this end dipped by 1 basis point to close at 9.64% from the 9.65% it closed at the previous auction. Our expectation for today generally is that the market will trade actively as some players try to book quick wins on their auction winnings, while others will try to feed their lost bid in the secondary market. I'll conclude with the Nigerian bonds market. The bonds market traded on a relatively quiet note yesterday with buy and sell interest observed on the short-dated maturities, especially the 2023, 2024, and the 2026 maturities. However, there were offers across the mid to long end of the benchmark curve, especially the 2035, 2036, and the 2049 maturities. We witnessed a slight improvement in rates across some maturities. Those maturities were 2027, 2035, and the 2045 maturities, as some players tried to exit some of their holdings in anticipation of an increase in the marginal rate of the 1 year NTB paper at the primary auction that happened yesterday. As a result, some trades were consummated majorly on the 2027, 2035, and the 2045 papers. Overall, rates each stopped by 2 basis points across the benchmark curve. Our expectation for today is that the bonds market will trade the post-NTB auction sentiment. Hence, we expect the current sentiment in the market to persist, given that the marginal rate on the one-year paper closed at 9.64%, which was a dip of 1 basis point from where it closed at the previous auction. That concludes it for fixed income. Thank you very much.
Thank you very much, Omar again. Next, we'll hear from Temple Ashaju, a partner from Frontier Africa Report. Good morning, Temple.
Good morning, all. So quickly, we take up from the eastern part of Africa, where Tanzania is looking to spend some 10.7 trillion shillings for the debt repayments and other services in their fiscal year for 2021-2022. And of course, that is part of the estimates for the proposed 5-year National Development Plan, which was presented to their parliament yesterday. Ethiopia just opened a first coffee training center to boost exports. It's sort of a partnership between the United Nations and the Italian Development Cooperation Agency, and I think one or two other private sector key actors. We all know that the World Bank also just released the projections for the globe yesterday. When it came in the morning, it was embargoed, I think, up till evening. So basically, they expect Egypt's real GDP to grow by 4.5% in 2021-2022 fiscal year. Of course, they also forecast 4.6% growth for Morocco in 2021, as opposed to just 4% that was predicted earlier. They also expect the virus to continue to hurt emerging markets and, of course, developing the frontier markets as well. So Africa Finance Corporation has now increased its membership to 31. The recent additions were Democratic Republic of Congo, Burkina Faso, and Morocco that have just joined. That, and then a couple of other countries. That basically lifted the numbers of membership states from 26 to 31, and that's more than half of the entire countries on the continent, 55 African countries, as opposed to previously 54. And so this will basically help AFC to do more around infrastructure, renewables, technology, energy, and internet broadband, which we know that they are quite heavy on. Cameroon is expecting its budget has basically just been revised. It's up by 11.22%. South Africa's got its business confidence data released yesterday. It's hit 97 in May versus 94.7 in April. And we all know that the rand has actually been gaining in recent time, but yesterday that level of gain was bucked a little, but I think it's back up again this morning. It was basically hit because of the projections that analysts were expecting from the US regarding CPI data which will be released today. Some are projecting 3.4%, or yes, 3.4%. And that is something that is expected to favor food and energy inflation in that country. So it basically is more like holding to be able to invest in a more favorable market. But basically, that's just that about the two currencies, rand and US dollar, which have been going back and has been losing a little bit to the rand in recent times. Zimbabwe's remittances is increasing, $411.1 million for January to April, and that's as opposed to $221.9 million, which was recorded in the previous quarter. These are some of the headlines we have to share with you this morning. Thank you for listening.
Thank you very much, Temple. We've now reached the Q&A segment of the meeting. If you have a question that you would like to ask, you can raise your hand if you prefer to speak, or you can leave a message in the Q&A box of the chat box. And if you are joining us from Facebook, you can also leave a question in the comment section and we'll get to it. It appears that we have no questions. It means we have reached the end of today's meeting. Thank you so much to everyone for joining us. We hope that you will join us again for our last edition of the week tomorrow. Do have a good day. We urge you to continue to stay safe. Good morning.